Taiwanese index lower by around 200 points.
Stock market is one of the few that looks set to end the year with a net gain, and we've been seeing some money move to take.
About 125 crore of investment is what they have done in the company over the last 3 days.
Dr. Reddy's is in focus because the company has said that all claims with regards to Revlimid generic have been dismissed.
Down about 80 odd points for the Nifty. The sensex is down about 300 points.
My feeling is that right now, from asset side, market will focus on the liability side of the bank.
Because the kind of growth which we have seen is essentially riding on the growth of the economy which we have registered.
Some new shares were listed and they are now available for trading. So little over 17 crore new securities have been listed.
Benchmark indices are down close to about 0.6, 0.8% gone on Nifty as well as Sensex.
Geo platforms should now get ready for India's next big opportunity to provide unique digital products and solutions to both domestic and international markets.
Bharti Airtel is looking to list Airtel Payments Bank.
Weekday in trade and mid-caps, they are the ones which are underperforming other benchmarks as well.
Well, one full trading session and 1 hour to go as we wrap up 2022, trading-wise at least. Guys, hi, good afternoon. You're with us here on a closing bell. On a fresh new edition of Closing Bell. I'm Prashant, with me my colleagues Rima and Mangalam. Well, it's a decent bounce as well, so that has not gone away. That impulse to buy the dip has not gone away. So the low today, by the way, was 17,993. We had highlighted 18,000 as a strong support, so almost got there. 7 points extension beyond that, and then kind of a decent bounce. Resistance, as we've been talking about, is this is obviously all very near term, is about 18,190, which is the point where, which is basically the retest point on the rising trend line all the way from the lows of June. So keep an eye out on that. That still seems a little far away, given the way the market has been trading. Doesn't look like, anything would happen, but doesn't look like, looking at the session we've had so far, that we'll see an attempt towards that. Bank Nifty low was 42,489. So we had highlighted supports at about 42,400. So I think that still remains pretty relevant. Banks are doing quite okay. Overall market breadth is negative. And if you just go through sectors which are doing well, or the kind of stocks which are doing well, nothing special. You just are left wondering, where is this sharp pullback from the lows really coming from? It's from a few names, Infra, State Bank of India, and one or two more names. Even on the Nifty 50 stocks, the breadth is in favor of declines. But you got that bounce. On the index, it's not looking bad at all. Rima, hi.
Hi, and by courtesy that, for the week, we're up about 1.5% on the Nifty. For the mid-cap index, we're up 3.3%. And for the small-cap index, in the first 4 days, things have turned around, right? It's up nearly 5%. So just last week, markets, after that tumultuous, horrible fall that we had on Friday, we were fearing the markets are going to head much lower. But look at the rebound that we've clocked in the last 4 trading sessions. Look at the week-to-date gainers, and it ranges from sectors in the banking space. You've got State Bank of India, ONGC, Tata Steel, Maruti. So these, show up in the weekly gainers list. On the losing side, this week, it's only the pharmaceutical and the FMCG names. So pharma losers like Apollo Hospital, Cipla, Dr. Reddy, FMCG losers like HUL, Nestle, and the cuts you can see are between 2.5% to 4%. But Mangalam, it's the series expiry, as we've been saying. So the last hour is very crucial.
It is very crucial indeed. In fact, why just the last hour, the hour that went by as well was extremely expiry-like, because for most part of the day, the Nifty was hovering around that 18,000 mark. Not a lot of people believed that maybe the Nifty could go past that 18,050 mark. But lo and behold, we've seen a recovery of almost 90 points from the lows on the Nifty, 375 points on the Nifty Bank itself. What this has done is this has given bulls some breather to go ahead and ride the 18,050 put. Just before that, the 18,050 call should come up for you. Currently, it's showing an open interest addition of just around 43 lakh shares. At one point, the open interest addition was over 1 crore shares, and the premium on that was 12 to 13 odd rupees. Once the Nifty crossed past that 1850 mark, we saw all these call writers run for cover. Near 50 lakh shares, unwound out there. And if the market sustains here, we're probably likely to see the remainder also see some short covering. However, that may not last beyond that 18,100 mark, because the 18,100 call writers are still extremely active. We still have about 1.25 crore shares outstanding in open interest for a premium of 12 odd rupees. But we are seeing some support at lower levels. 18,000 now seems to be a firm support base for the market, because that put has consistently added open interest, and as has the 18,050 put. So short point, the up move that happened scared a few bears, and now if it sustains here, it may scare them further up until 18,120 odd. It is expiry. Do we have one last dance before that 3 p.m. also or not is the big question.
Okay, that we'll know in just moments from now. But we're all geared up for the last trading hour of the penultimate day of 2022. Are you? And to prepare you, this is what we've lined up for you on Closing Bell today. Devina Mehra of First Global will be joining in to tell us how we can distinguish between investing fact and fiction as we look into 2023. We'll get a technical check on the markets with Mitesh Thakkar of earningswave.com. We'll be joined by our Alpha Manager for the day, Aman Chauhan of Abacus Asset Management, to discuss his top portfolio bets.
Right, and there is some move happening from the lows, not only on the IT space, but a couple of these metal names as well. Hindalco, for instance, still in the red, but has recovered a fair bit from the lows, just about breaking into the green, in the red by just about 30 paise. In fact, as we speak, has broken into the green for Hindalco too. So the question is, how should you position yourself for trade in this last hour? We do have with us Mitesh. Mitesh, we did see a bit of a recovery in the last hour of trade, the last 1 hour or so. The Nifty hovering just below that 18,100 mark. Do you think shorts are in for a bad one this time?
See, my sense is that the pullback, which started on the index is not yet over. We are still believing that the hourly indicators are looking upwards. So I think, while there will be choppiness because the bigger trend is still negative and weak, I think you will keep getting bouts of buying at lower levels. And I still believe that 18,220, 250 zone could be tested before strong supply emerges enough to turn this pullback into and make the bulls retreat. So I think the overall sense is that choppiness, but mild upward bias in the short term. But I think at higher levels would be willing to go short. And as you were rightly highlighting, Mangalam, the metal names clearly feature on the list, which which you would want to keep on the buying side. And I have a buy on JSW Steel. I think the stock has given a good pullback yesterday and today, and I think now is showing some signs of pickup. So buy with the stop at 752 for targets of 790 here. And on the sell side is Nestle India. That's something which is continuing its declining trend. So that's a sell. Keep a stop just above levels of 19,830 and look for targets of around 19,250 on the downside.
All right. Mitesh, thanks very much for that. We'll come back to you in a bit from now. Now, Devina Mehra is now joining us, founder, chairperson, managing director at First Global. Devina, it's a pleasure. Great to have you with us here on the program. Season's greetings from all of us here at CNBC-TV18. I hope you're having a good time at that time of the year. And thank you for being with us today. You wrote an article for Money Control. It was titled, "Why Half-Truths Can Be More Dangerous Than Outright Lies." And you gave some very interesting examples. As we head into and look into 2023, it's a time for predictions, right? I'll ask you to make a few in a bit. But as you look into 23, to your mind, what are the one or two kind of these half-truths which are accepted as gospel and that kind of need to be shattered, that needs a relook, in your opinion?
Hi, Prashant, and hello to viewers also. Right. So, hi, good to be here. And actually, there are many myths in the markets, and the myths actually come out of the fact that we as human beings have many biases in our makeup. There is bias and there is noise, that even the same facts presented to you as, let's say, if you are a judge or an insurance professional, or for that matter, a market professional, the same data presented to you one day and then presented a month later, you might come to different conclusions, let alone different people coming to different conclusions. So, one of the things which I highlighted in this article was that often people give all this data that if you had bought HDFC Bank in 1996 or Hindustan Lever at this time or Tesla or Apple or whatever, then you would be worth so much. But there are many layers of myth in this. For one, many stocks which were considered blue chips earlier just went into nothingness. So if you look at, for example, if you look at the original Sensex list, that will have all this JK Group and Thapar Group and Mafatlals and Premier Automobiles and Hindustan Motors. Then in between you had a lot of PSUs in the Sensex or the Nifty. So all these things, even if you buy the so-called blue chips of the day, it doesn't mean that there is any guarantee that 20 years later you would have compounded at a great level. That is one. But even stocks that have supposedly done well, if you look at the history, of Apple, for instance, for a long time after its listing, it did nothing. Even 20 years after its listing, it had only doubled from the IPO price. So, this grand story is, first of all, a lot of stocks just fall by the wayside. So you are only looking at the survivors. And even those survivors may have had very checkered history. So that is something people, I mean, if I bring it down to a nutshell, in anything, you look at long-term data and you really look at it objectively, you will find things which people are just ignoring. I mean, yeah, and it goes always. Like if you look at at the time of the Russia-Ukraine war, on that day, on the day the war broke out, we had done this analysis going back 40, 50 years, that every time there is a geopolitical crisis, the two Gulf Wars or 9/11 or US bombing Libya or Afghanistan, we said, let's see what happens to the markets. And we saw that before, during, and just after that event, there is turmoil in the markets. But 6 months, 1 year later, the markets forget about it. Other than the direct impact, like if oil supply is impacted or something is impacted, that is different. But stock markets around the world might react to that event, but they forget about it soon enough. So I'd actually make a prediction on the day the war broke out that in India, you will, 6 months later, it won't even show up, other than the impact through the commodities, which is the impact on the fundamentals of companies. So, there are basically, I mean, we always say that in data we trust. So you have to look at data for everything, and you will find that so many things that people believe are just myths. I mean, people ask me that you talk about your pick of HDFC Bank or Amazon. Tell us which is the next HDFC Bank or Amazon for the next 20 years. And the answer to that is that nobody has this crystal ball. Even if you would ask Jeff Bezos, when we put that strong buy on Amazon at $15 in 2001, or if you'd asked Aditya Puri after the IPO, they also would not have known that the stocks would compound the way they did. And which is why no investor in the world, the very best investors in the world, whoever you want to pick, whether it's Warren Buffett or Rakesh Jhunjhunwala or whoever has the greatest track record, you will find most of their money has been made in a handful of stocks. It's as low as, even in a 50-year career, like for Warren Buffett, it is just about 8-9 stocks. So, and no one knows which those 8-9 stocks will be. So the best you can do is have a good portfolio. And if you've chosen it well, maybe some of them will be multi-baggers, but you must also remember that some of them are going to be duds, which is why I, buy and forget, or buy and don't react, even if there is a huge drawdown, and just hold it through, is very bad advice.
Okay. Devina, afternoon, fair enough. And there's always good money to be made in pessimistic situations, and that's what history has told us. In that article, you also make a reference to Asian Paints. Can you give us some more examples where the nuance in what's being sold to investors is lost in the storification, as you call it? What happened in the case of Asian Paints, and some other examples?
Yes, yeah, I mean, Asian Paints, of course, I mean, that was a particular thing that there's this news saying that Asian Paints delivers paints twice a day to its dealers, which if you go to any paint dealer, you will find out is not the truth. And the fact is they don't need to do that, because the paint is actually mixed at the dealer level. That's the technology. So they don't need to, decide that this mere wala pink is going to sell, and therefore I need to get this to this dealer in Kalba Devi in Mumbai. They don't need to. The dealer can mix it. So that is one part. But storification is a broader theme. Actually, the thing is that as human beings, we that this is stories are what makes us human. So if you look at all civilizations across time, across geographies, the one thing which is common is stories. We uh, explain things through stories, we teach through stories, we remember stories, we don't remember data as well at all. So stories are great. For example, if a fund manager is selling a product to investor and he or she explains that this is how I do it, or this is why I have bought this stock, and this is the story behind it, it's very good. But the markets don't care about stories. So I mean, I like, for example, in 2020 I was on your channel when FMCG was all the rage, and there were all these fancy stories saying that this is a cash flow generating business, great brands. So very nice stories you can tell about, a Nestle or a Hindustan Unilever and all that. But again, you look at data and you see that theme comes and goes. It is not it's not a theme that runs forever. If you look at Hindustan Lever from 1999 to 2010, it gave no returns. Bata gave no returns for 15 years. Even Coke, so what happens also is that if you tell a story too many times, you yourself as a storyteller also start to believe in it. So if you look at, Coke is one of Warren Buffett's most well-known investments. But if you look at what it has done for the last 30 years, not 1, 2, 3, 4 years, but 30 years, it has hugely underperformed the S&P 500, underperformed Pepsi even more. So it's, last I saw, it was up some, there was like about a 50% underperformance from the S&P. So the point is that stories are not reality, but by telling that as human beings, you buy into it as the listener and also as the teller of the story, and then you cannot change your mind. The point is that you tell that story too many times, you are invested in that story and you cannot change your mind. So we always like to look, for example, in the way we manage portfolios, we look at everything from scratch every quarter, and nothing is a holy cow. There's nothing that cannot be touched.
I don't know what worked, the storyfication or you saying Mera wala green, etc., or just absolute randomness, as Nassim Nicholas Taleb says. But as soon as we started speaking, we did see the markets move higher. Devina, so we will give credit to you right now. The Nifty's moved into the green. The Nifty bank higher by about 150 points. The mid-cap index has curtailed its losses as well. And the sensex too has moved closer to the 61,000 mark, just about 50 points away from that. But, let's talk about behavioral finance itself. Devina, it's easy to say that in hindsight, data provides a lot of instances where things have survivorship biases, etc. But while you're going through it, it's difficult to, differentiate from the individual and the situation that there is. Can you give us some examples of your own where you may have, unknowingly fallen into any of these biases as well?
So, see, this is a process of learning. When you come into the markets, obviously, you will make mistakes, you learn, you think about how to not make those mistakes, which is why over time we have moved from a human-only research and fund management business, or the way we do things, which is the way, everybody else still does it. And, I love doing it that way. I was one of the first people to start in equity research 30 years ago when the discipline did not exist in India. But over time, you realize that now the playing field has changed. Now, earlier, you could have an edge by going and meeting a company and getting some differential information. Now, everything from the con call transcripts, everything is public. And here, as well as around the world, there are regulatory changes which mean that no one can get differential information. So now what you have to do is analyze the data. And that is what we found, that the only way to do it in a consistent fashion is to use machines. So which is why we say we have a human plus machine model, where the first filter is an artificial intelligence, machine learning, very elaborate, very rigorous model. It is not a black box. We know exactly what's going in and why it's recommending something. but that's the only way to do it consistently. Because see, I can read all I want about cognitive biases. Daniel Kahneman has won the Nobel Prize for writing about cognitive biases, but he says that even I cannot eliminate my biases, because see, the thing is that all these biases are very hardwired. They are part of evolution. They were there because they were helping you survive in the wild. It may not help you survive in the stock market. So just by understanding it, you cannot eliminate it. So you have to systematically eliminate it, and the system part is important. So that is why we now extensively use artificial intelligence and machine learning, which can not only crunch a lot of data, but it is consistent, it is bias free, it has no problems admitting mistakes, learning from mistakes, and then you apply some amount of human overlay. But for example, in risk management, we do not apply human overlay,
Right.
because the human instinct will always be to say that I did not make a mistake.
Right.
This time, let's wait a bit, this stock is different, and so on and so forth. So this is a very interesting journey.
Devina, make some predictions for us. Non-consensus predictions, which I don't know if you have thought
So,
of it. But it's the season for predictions. I know, studying past is much easier and much better than predicting the future. But nevertheless, since we have you on this time of the year, the wilder the better. Go on, Devina.
Okay, so first of all, I have never given a nifty target in my 30 years for either on Diwali or New Year. But the beginning of the year, I had made two big ones. One was that the rupee will certainly depreciate this year, which it did. And the second was that India will outperform, which it has. So out of like 42 country indices, India is number 10. So in dollar terms, we are down, I think, about 4.5% as of yesterday or something like that. Whereas the aggregate global markets are down about 19, S&P is also 19 and odd. Nasdaq is almost at the bottom. Only Sri Lanka is lower at minus 34%. So last year I told people that it's not as if that the Nasdaq will always do well. So that was also part of storification and recency bias, that because it had done very well for 2 to 3 years, you'd say that you're just extrapolating that. India had come out of a very long period of underperformance, both relative to its own history as well as relative to global markets. And the outperformance had only really started in 2021. So I was quite confident it would continue in 2022. As of now, it still looks as if it will continue. So India is still among the better markets in the world. We are watching carefully whether there is some amount of moving of the leadership from US to emerging markets in Europe, which we are just watching to see whether that's like a kind of a long-term change or it's more short-term in nature. And within US, we like non-tech better than tech. So the old-fashioned consumer cash flow, that kind of those kind of stocks are looking better, obviously also because interest rates are going up. So interest rates going up means companies with profits a little further away don't look, or cash flows more further away don't look as good. So that would be broadly. So India looks as if it will outperform for now. Certainly that appears to be the case.
Okay, all right. On that positive note, we could go on that. It's an interesting rabbit hole to get into predictions, and but we'll leave that. I guess we'll invite you back first week of 2023. It won't be late enough to make those predictions and give you time to think about them as well. Thank you so much, Devina, for joining us today. Great to have you with us here as always. And if you don't see you before the 31st,
thanks for having me.
Yeah, wishing you a very happy new year. Thank you. All right, that's Devina Mehra, First Global, with thoughts on the market. Interesting conversation about biases, human behavior. That's a bulk of it. The data, the analysis, as Devina pointed out, that is the lesser of it. As we of course all know, the market is, as Mangalam pointed out, up 20 points, 22 points. 18,144 is where we're at the high point of the day, and there's 40 minutes to go for market closing. We are going to take a break. We have another very special guest joining us. Our alpha manager of the day is Aman Chauhan of Abacus Asset Management. He's waiting by with his calls for 2023. Stay with us.
And what a crazy expiry move this is turning out to be. The Nifty Bank is just about 100 points away from the 20-day moving average. It has recovered a good 600 points from the lows. And for the Nifty itself, at the start of the show, we were looking at the 18,100 call, hoping that the bears, or rather bears were hoping that the Nifty does not go past that 18,100 mark. Not only has it gone past the 18,100 mark, it also touched 18,150. And the 18,100 call, which had about 1 crore shares in open interest, all those shorts have run for cover. Now only 23 lakh shares remain in terms of additional open interest. The overall open interest is just 83 lakh odd. So if the market sustains here, these 83 lakh option writers will also have to cover their positions. So it is short covering which led the market higher above that 18,050 mark, and now above 18,100 as well. These call writers have covered their positions, and at the same time we've seen an equivalent amount of put writing taking place there. So all things expiry taking place. Back to you guys.
Absolutely. Just look at the intraday moves in Hindalco, Tata Steel, JSW Steel, Adani Enterprises. It's a vertical up move that you're seeing across the board. L&T is another stock that we're looking at. Adani Ports, as I highlighted, Bajaj Finance. There you have it, that big up move coming through in the last 15 minutes. Aman Chauhan, the fund manager at Abacus Asset Management, is now with us on the show. Afternoon, and thanks so much for joining in. This year, the equity markets moved their loyalty away from the IT names to the undervalued, unwanted PSU banking space. As we enter 2023, what are the big trends that you are noticing?
Coming 12 months will be the biggest trend will be what the government of India decides. This is going to be the year ahead of the elections. So I feel that there's going to be a lot of tendering for infra, both civil as well as urban infra. There will be infra creation. So that is something going to be the big highlight. So companies directly and indirectly exposed to this is going to be in the limelight. And valuation-wise also, this sector is not something which is out of the whack or very expensive. Hence, there's enough scope for PE re-rating also in this sector. So this to me would be something which is interesting. Also financials, though this year has been good, especially the last few months. Going ahead, I think the financials will continue to do well because we are coming out of COVID worries. The NPA costs are coming down. There's decent credit growth, though rates are going up. I think the economy is picking up it well. So these two would be, I believe, the top two sector for us for the coming year.
Well, hi, Aman. Thank you so much for joining in. Season's greetings to you and your team members. You said that there would be a lot of ordering activity, etc., for the next year. I mean, how do you play the capital goods theme? Would you play it via EPC? Would you play it via road construction? Would you play it via manufacturing, or would you, play it plain via cement primarily because that is required in all sorts of capex?
Both. Preferences towards EPC companies, which is into manufacturing, less towards cement. But cement is also looking good from a tactical as well as from a one-year angle because 2Q was the worst quarter. This quarter, things will be better than 2Q. 4Q, I believe the company will be back to that 800 to 1,000 rupees EBITDA margins. And hence, cement also is looking good from a one-year angle. But yeah, obviously, the preference is towards the EPC companies.
And Aman, hi, afternoon. So we had the management of SBI with us this morning. It's been a bit of a PSU bank week for us. We had Canara Bank with us yesterday. Is it, so in Canara's case, 60% is corporate. Their liability franchise is not as strong as others. And hence they're raising money at some 7%. They said they raised 1 lakh crores in deposits very quickly in a few weeks, which obviously raises the question, what happens to yields, etc. For SBI, on the liability side, it's not that big a challenge. At least that's what the chairman told us this morning. What do you like in that space, PSU banks?
Obviously, preference is more towards private bank versus PSU. Within PSU, I think I'll stick to the leader because that's where the CASA is the best. This year, it's going to be the year where banks which are able to raise the CASA deposits and able to raise the liabilities will be able to fund for the growth, or else they will be starved of capital and the growth rates would lag. Hence, prefer to stick with the leaders where the retail franchise is pretty strong. So within PSUs, I'll just stick with the leader. Within privates, it's anybody's guess. Top 3-4 names are all as good as others. So they're all very well placed as far as the deposit franchise is concerned.
Aman, when do you think the net interest margins of banks will start declining as the deposit rate increases catch up with the lending rate increases that we've seen so far? And is this something which will come and halt the up move that we are seeing in the banking space if NIMs start contracting, say in Q3, Q4, whatever your own estimate is? Will it cap the rally?
I don't think it will cap the rally. It will cap the upside multiple possible. Say, for example, if bank today is trading at 1.5 time book, and if somebody is expecting it to go to 2.5 time book, once NIM starts contracting, I don't think the 2.5 time book valuation might come in, but it will say capped around say 2 times book. When NIM starts contracting, the P expansion stops. But if the profit growth continues, if the credit growth continues, then the bank's earnings growth continues, and that will be a decent enough trigger for the stock and for the sectors to continue to outperform.
Start contracting, and what could be the extent of the contraction in NIMs?
Obviously, the corporate-facing banks would have a higher contraction because most of the retail-facing banks will be able to pass it on, because most of the loans that were given in the past several years now are all linked to the floating rate. So the retail banks are better placed versus the corporate banks, and for corporate banks, it will be different for each bank. Very difficult to give a number.
All right. What are your thoughts on the mid and small cap space? Do you think there are opportunities there? If yes, then in what subsectors?
Within the small cap space, there are definitely opportunities, and I think in the next 3-4 months is going to be interesting times to look at them and to cherry pick some of the names there. The reason being, right now in the market, we are going through more of a mean reversion, if I can say. What's happening is companies that benefited out of COVID are giving away those benefits, and the ones that face margin pressure or demand pressure due to COVID are now getting it back. And hence, this is a very clear mean reversion trend which is going on. So difficult to say as to which sectors. I think across the sectors, there will be some companies that will benefit, some companies that won't benefit. Obviously, you need to stick with the winners there. So in that sense, I'll say the small cap space in pharma is looking good because bulk of the negative activities, bulk of the negative margin pressure is already in the price. Within the next 6 months, I think with the IT space will start to look good because the peak of attrition is behind us and the margin pressure is also behind us. Currency is a tailwind. The worry regarding growth, there will be clarity in 6 months' time as to where the US economy is headed, whether there is a soft landing or hard landing there. And that, to me, would be a good trigger point to look at even at IT names. Besides that, cement, mid caps in cement, mid caps in engineering space also are looking good. So you have to be selective, but you will get opportunities across the board, I feel.
Do you still own names like Iron Exchange, Canfin Homes, Green Panel, etc.?
We don't comment on specific names, but yeah, they are part of a portfolio which is public disclosure.
Yeah, no, this is all public. I mean, nothing. Yeah. This is part of the publicly stated top holdings. Just talk to us about, Iron Exchange, right? It's come off a little bit, but just a fantastic run the stock has had. It rarely gets discussed, but could you tell us what are prospects looking like after the run that we've had? What are valuations on this one now relative to history? Go on.
So it's a great business to be in the current times because this is where the government focus is. Government is clearly focusing on water, both for commercial use, industrial use, as well as on the residential front. And Iron Exchange is one of the biggest companies in this space, very well placed. And you can go to the numbers. It's a very decent growth as well as margin company. And I see no reason why the historic growth rates for this company shouldn't continue for the next few years. So from that perspective, it's a great business in a great sector as we speak.
Okay, fair enough. Canfin Homes, Aman, we spoke with Canara Bank. They said that the new MD should be in the seat in the next 3 months. Will that be the trigger?
Definitely, that will be a trigger because whenever there is an interim limbo, when there is nobody to head it, growth rates tend to slow down, disbursements tend to slow down. That is, I think, what's also happening in the game. And once the new MD comes in, there's definitely a renewed vigor. It's a new direction that he comes and brings to the company. And that helps both in picking up the growth rates and investors getting confidence on the person who is managing it. So clearly looking forward to a good head at the company there.
Company we spoke to is Green Panel. Again, I mean, it's come off quite a bit. Any challenges per se in terms of a lot of capacity coming up in the sector? How do you look at this space? This is laminates, right?
No, this is MDF, and clearly in the next 12 months, 2 new capacities is coming up. There's some imports also which have started to trickle in, but it's a very high growth sector. It's growing in excess of 20-25%. And I believe for the next 12 months, the new capacity which comes up, that has also come at a cost which is decently higher than what the old capex was done. So I'm not expecting the new capacity to be completely irrational and there's going to be a price war per se, because it's still a 4-5 player market. It's not something which is hyper competitive. And hence, I think for the next 6 months, once the new capacity comes in and the investor gets confident that it's not going to be a hyper competitive environment, then the PE derating which this segment has seen should reverse, because the earnings growth, I believe, will stay strong for this sector for multiple years to come.
Actually, we spoke with Green Lam, which is the laminates business, but I ended up asking about the right company, Green Panel, because the excess capacity, a lot of the, not excess, but a lot of capacity is coming in MDF and particle board. But you guys are holding on. Thank you very much for joining us today. Great having you with us here, Aman, and have a good end of the year, and wishing you all the best for the new year 2023 from all of us here at CNBC TV18. Well, the market is doing absolutely great. We're up 60 points, and just look at things go. We are, by the way, as we speak, back at that trend line, June trend line, which is at 18,190, 18,195 roughly. We are at 18,190. So bumping into that one once again with this 1/3% gain on the day so far. We'll take a quick break here. Ambrish is with us on the other side, but we'll also get you the dealing room check in terms of what Nimesh is.
43,168 taken out on the Nifty Bank, which means it has crossed the 20-day moving average, a mark that was proving to be a resistance for a very long time. It needs to be seen whether it's just expiry-related moves or it sustains into tomorrow's trading session as well or not. But for now, markets in fine fettle. We have the advance decline as well for the first time in the day, moving in favor of advances, though it is by a narrow margin, but advantage advances it is indeed. The mid-cap index is in the green. The Nifty closing in on that 18,200 mark. 18,220, remember, is where the 50-day moving average is right now. What are the dealing rooms saying? Nimesh, I believe it's all about expiry today?
It's all about expiry today. So that's a large part, and that's why you've seen a big surge in the last 10-15 minutes of trade. But there is expiry, there is Nifty rebalancing, and there is CPSE rebalancing as well. So those will have an impact on the flows in today's trade, largely from the domestic side. But again, we've been trading in a very narrow range. That's been the trend for all of this week. In terms of sectors, I guess again there is a bit of momentum in the PSU bank stocks, so that's leading on the upside. On the downside, a bit of profit booking in cement stocks. Yesterday, there was a report from a couple of brokerages suggesting that there has been a price cut of 4 rupees per bag on a month-to-month basis for cement companies. Hence, we're seeing a bit of profit booking in that space. But having said that, from a range point of view, we are pretty much in this range between 17,800 on the downside and 18,200 on the upside. So that's something to take out on either ways for a big move. But I guess a couple of things will be important. One, the rollovers have been quite strong going into the Jan series, so that's important. Two, come next week, we're going to have the auto sales, monthly sales. That will have an impact on a lot of the auto stocks. And the quarterly updates will start pouring in for financials, for consumer names that you track. All will start putting in the quarterly updates. So that will have an impact on individual names. So that's something to watch out for. But today, I guess it's the expiry and the rebalancing which is having an impact in the last 1 hour of trade.
And low non-institution, non-balancing volumes as well. So we will watch out for that. Individual stocks, what have you heard?
So in terms of individual names, the first stock on my list is Minda. Not for today, but largely the feedback is for the last many days, a leading FIS and buyer in this particular stock. So some of the domestic supply is getting absorbed by large FIs, what I understand, in Minda. So that's the first one. The second stock is RBL. That's been a big surprise move of late within the financial names has relatively outperformed, and every dip is getting bought into, and the overall feedback is a couple of domestic funds and a leading FI has turned buyer in this particular stock. So even in last week's fall, the fall was used as an opportunity to add into RBL. So I don't know, there are a lot of speculations going around about a possible fundraising, but largely it's been outperforming on fund buying. And the last stock is AB Fashion. In today's trade particularly, the feedback is that in AB Fashion, there is a leading domestic fund who's an active buyer, and hence that stock has outperformed in today's trade.
All right, interesting list as always. Thanks very much, Nimesh, for that. So those are the list of stocks to watch and a broader color on market participation and action as well. 74 points. So, it was looking like it's going one way. There's 15 minutes to close, but this is halting a little bit. 18,192, 18,190 after hitting 18,200 plus. Mitesh is with us. Mitesh, late surge, but surge nevertheless. What would you do?
So I think, I was actually just highlighting this point that the hourly indicators are still looking upwards, and therefore this chance of heading towards 18,220 to 50 still remains. We're just waiting. I think, around these levels, we started shorting some call options of 18,500 strike January. But in case we see a decline, then we'll go short in the futures as well. On the stock side, metals, I think, is a sector which is looking very good. So I had JSW Steel earlier as the call. I think General Steel was the top call today morning, can be taken as a BTST trade with a stop below 584, targets of 600. The other one which is good is possibly State Bank of India. Here a BTST can be taken with a stop at 606 for targets of 620.
Thank you very much for that. Let's also invite Ambrish Baliga on the show now. Ambrish, afternoon. You have a stock recommendation for us, Maruti Suzuki. Can you tell us why?
Right. Good afternoon, Rima. Maruti has been my pick for a while, and I'm again recommending it today. In fact, the sort of a distribution network which they have set up, I think is quite difficult for competition to replicate. Though the market share has reduced to about 41% from 51% pre-COVID, the focus now is to again regain the market share, and they had actually lost this out because the market tilted towards SUVs. So now the focus is on high-end SUV segment with launches in Grand Vitara, new Brezza, and upgrades for ZL6 and Ertiga. And I think they should be soon launching a Jimny SUV, which I think should be a hit with the millennials. If you look at Q2, production loss was there of about 35,000 units due to supply side issues, which are gradually now being set right. And the Q2 margins, in fact, improved to about 27% because the raw material prices also corrected. So that's expected to be now continue further. And we have a pending customer orders of more than 4 lakh vehicles. So should in fact operate at full capacity in FY24. And I suppose the new capacity will be coming on stream from FY25 onwards. And if you look at INR yen, that's been quite favorable. So I think that should also reflect in the second half performance due to low cost of vendor imports. And from January 23, as usual, we'll see again some price hikes, which should add to the margins going ahead. So we should see a revenue CAGR of about 24% and EBITDA CAGR of about 49% over the next 3 years, and looking at an EPS of about 358 for FY24. I have a target of 10,382.
All right, that's a tall target on Maruti. Amrish, the market's just doing market things. We're seeing big moves across the board. But on the frontline space, we saw the biggest move of lows come by on Bharti Airtel. A couple of news pieces out there. One is that they're looking to increase their rates. That's from news reports. And the second one, Rima just told us that, they may list their payments banks separately. Have you read much into this in terms of the valuations that it can attract and what it can do for investors in Bharti Airtel?
I think it will have a sentimental impact. I don't think it will move the needle too much from a valuation perspective for Bharti. But I think the big story going ahead is the 5G rollout, which will in fact improve the ARPUs overall. Over the next possibly 12 to 18 months, may not be immediately. And in fact, in 5G, it's going to be basically 2 big players, which is Jio and Bharti, because Vodafone Idea surely doesn't have the cash to roll out 5G. So I think they will fall behind. And it'll be these two who will be there in that game. And because of which I'm expecting the ARPUs to move much faster. In fact, the CEO of Bharti also was talking of 300 rupees, ARPU over the next possibly year and a half, I think it will be achieved before that.
It will be achieved before that. 72, so 72 points on the Nifty, 18,194 is where we're at. So there is some more, not in moderation, but it's not going one way. That's the point. Amrish, do you any thoughts on Shriram Finance? After the merger between Shriram City Union and Shriram Transport Finance, the new entity down 5.5%.
No, in fact, I've not tracked that very closely, so it's a bit difficult for me to comment on that. But if you're talking of NBFCs overall, I'm not that bullish. Even the BFSI space currently, I think, is overpriced. Possibly the PSU banks can move up a bit more from here because of the momentum. But then looking at the sort of valuations, I think it's time to book out. So better to wait for a while because clearly the deposit rates are also going up. And that's going to squeeze the margins going ahead. So I think we have seen the best of the story already. So time to book out.
Time to book out. Page is another one. Wasn't there a positive note or something? Or
upgraded Page, I think just yesterday.
I see.
They had upgraded Page. How much is it now?
Down some 2.5%, 3%. Basically, it's given back yesterday's gains and it's back down. I presented this on the 14th of December when it had kind of broken below that, same June trend line. And price was about 47,000, now 43,378, 43,400 on Page Industries. The market's doing well. I mean, another 10, 15 points quickly, 18,207 at the high point as we inch closer towards the closing point. We'll take that break. On the other side, more on markets, more conversation with Amrish. Stay with us.
पूरा करे एक नाम श्री राम लाना ले जाना बेचना खरीदना कमाना बचाना सलाह पाना गुंटूर जोधपुर तिरुपुर एड्डूर गोवा पटना दिल्ली हावड़ा श्री राम के साथ आगे बढ़ना श्री राम फाइनेंस लिमिटेड आपकी प्रगति का साथी।
आज तबीयत ठीक नहीं लग रही, तुम ही सब काम निपटा दो ना। अरे टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
लो एमिशन प्रीमियम प्लस बाय सेंचुरी प्रोवुड।
Our success reflects your trust. Global business crosses rupees 20 lakh crore. Thank you customers, stakeholders and well-wishers. Canara Bank. Together we can.
Reimagineering brighter futures with smarter steels.
18,200 conquered on the Nifty as we speak, up 85 points. The next stop will be the 50-day moving average, 18,235. So we're still about 25-30 points away from that level. Banks are outperforming. Nifty Bank is now up 1.2%. That's more than a 500-point gain. And there has been so much drama and excitement this entire year end, right? It stayed true to what this year has been. On Friday, we had the big fall and then the recovery in the following 4 days of this week. For the week, the Nifty is up 2.2% with the mid-cap index up 4%. But let's get you some market opinion now on where we are headed. Nilesh Shah of Kotak Mahindra Asset Management. Listen into what he had to say.
The overall liquidity in banking system at the beginning of the year on 1st April, it was about 8 lakh crore. And then over a period of time, it kept on dwindling at about 2 lakh crore. Now, clearly, when liquidity becomes scarcer, then obviously there will be scramble for deposits, there will be higher interest rates. So my feeling is that right now, from asset side, market will focus on the liability side of the bank. Banks with better franchisee, better ability to raise deposits at a lower cost will do well. This year, the gap between return of equity fund and a debt fund will be fairly narrower. COVID impacted EBITDA margins. Clearly, there was a hit on inflation and there was effect of slowdown at the bottom end of consumption. Our feeling is that in December 22 quarter, the hit taken thanks to the stock correction coming in will be over, but the volume growth is something which we will be critically watching. Clearly, the market is discounting rebound in the EBITDA margins to June 22 quarter level rather than sustenance of September 22 EBITDA margin levels. In our opinion, over next 3 to 6 months, IT sector should bottom out in US and correspondingly in India. Investing in IT sector at this point of time is like catching a falling knife. You know there will be some blood on hand, but if you can catch the falling knife, eventually it will make money for you. One sector where we are reasonably bullish is infrastructure. We believe before election, every government will focus on building up of infrastructure. This budget, like last budget, there will be enhanced allocation to infrastructure sector. And even the private investment seems to be reviving, albeit it is taking baby steps. Two sectors where we have to accumulate now. They may not bottom out today, tomorrow, day after tomorrow, but certainly over the next 6 months, they could provide good entry point is IT and pharma. Both sectors have been derated significantly. The volume growth or value growth in both those sectors are now in line with expectations of the market and could actually surprise on the upside. So IT and pharma provides great accumulation opportunity over next 3 to 6 months.
IT and pharma provide great accumulation opportunity over the next 6 months. Naren, who I spoke to, said something similar. Invest systematically into this, slowdown, recession in the US, whatever you want to call it. Basically, you get lower prices, better prices. You'll come out stronger, come out higher over a period of time. Amrish, you would go with that? Agree with that?
Absolutely. I think of pharma, one should be investing right away. I think IT, one can possibly wait for a quarter or two before investing, because I suppose the next 4 to 6 months, we could see the markets not really going anywhere. In fact, correcting to possibly levels of 17,000. And that's the time to get fully invested, because post that, we will really see the outperformance by India. And I think that could be a multi-year run. So we have that time over the next 4 to 6 months to really get fully invested.
Time, pharma right away, and IT, over the next 2 quarters or so. Amrish, it's a pleasure. Thank you very much for joining us. Wishing you all the best from all of us here at CNBC-TV18. Thanks very much. Well, that's Amrish Balega, 83 points higher, 18,200. So we're going to leave off practically at the day's highest point and exactly almost at that trend line. The trend line which comes all the way from the lows of June, has a touch point around September this year. And then, over the last 3 days, actually 3 days now, we've basically been hitting that trend line and reversing. And today, let's see the close. There's still 3 minutes to go. But, for all practical purposes, basically on the trend line, so as to speak. We'll put a chart out tomorrow morning when we come back and see what the picture actually looks like. Just to wrap things up in terms of the markets today, so the Nifty ends very, very strongly, 0.8%. It's 0.5%, not even 0.5%, but it looks much better than the earlier session. Bank Nifty will also come up. That is done much better. That's a big spike. Starting about 2:30 or so, the Bank Nifty started moving higher, and it really never looked back. So the banks go home with a gain of 1.25%. Let's just look at the mid-cap and small-cap parts of the market and see what they did. The mid-cap index is up 0.25%, so a comeback, but a feeble one. And the small-cap index ends with gains of about 0.25%. To be fair, these indices also did quite well in the last closing hour of trade today. Mangalam.
Well, it was a stellar day from an expiry standpoint. Those who would have written the 18,100 call would have been taken to the cleaners. At around noon time, it was trading at around 5 rupees for a premium, and at close, it is 85 plus rupees. So that is the kind of day it was. The Nifty recovered about 200 points from the lows and ending above that 18,205 mark. The Nifty Bank was the one that actually led the rally. In fact, the Nifty Bank was up around 850 odd points from the lows, nearly 2%, crossed and conquered the 20-day moving average. Let's see whether the closing average is above that or not. 500 points from yesterday's close today on the Nifty Bank, but almost 850 points from today's lowest point. The mid-cap index, the breadth of the market at the start of today's trading session was close to around 2.5:1, 2.5 stocks declining for every stock that was advancing, but that had narrowed as well. From an index standpoint, a feeble recovery for the mid-cap index, just about 0.25% in the green, but the breadth of the market firmly ended in favor of the advances. 1,500 stocks higher for just about 1,300 stocks lower on the National Stock Exchange. The mid-cap end of things, the stocks that did well, we had Indiabulls Housing Finance, Pfizer came back in the last hour, Federal Bank, BHEL, PSU banks as well began to surge. Bank of Baroda, we saw some gains in Canara Bank as well, which continued. Among the stocks that did not do too well, a lot of supply coming in for Shriram Finance, so that stock ended about 5% lower. For the second session in a row, we are seeing weakness in Amara Raja. The stock is now down around 9% for this week. With that, it's almost 280 points lower for December series, the last series of 2022. We wrap up on closing bell on a positive note for today's trading session, but you don't go anywhere. Our special show, Medicine Box, comes up next.